measuring methods of measuring national income. And we know the methods is, the first one can use the product method, the second we'll discuss the expenditure method, and the third we are going to discuss income method. So we are going to discuss these three methods of calculating or measuring the national income figure. Let us start with the product method. As we know, product, we are talking about all the goods and services which is produced in the economy in a particular year. So product is equal to goods and services produced in the economy in a particular year. Now, to find the national income by using the product method, you need to take the market values of all final goods and services. You take the market values, means you take the market values of all final goods and services produced in the economy. So make sure that you use the final goods. When we say final goods, it means all goods which are ready for use. Final goods like let's say clothes, when you buy it or you produce it, and that clothes is going to be used by wearing, so we call it a final goods. Or you buy a product and you are going to consume, so that we call as a final goods. So now how can calculate the national income by using this product method? It means the national income will be equal to the summation of PI, QI, whereby P is the price of a commodity and Q is the quantity of that commodity. So let's say you take the price which is P1 times Q1 plus, let's say we have another product, let's say maize. So you take the price of maize, which is P2, times the quantity of maize produced in the whole country. Then you add plus dash 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 plus Pn times Qn. So N stands for the number of prices and Q stands for number of different goods and services we are producing in our economy. So to find the national income, you take the market value. This prices is the prices which prevail in our markets. For instance, the price of sugar most we know is about 2,500 and so forth. So by using the product method, the national income will be obtained by summing all these revenues obtained when you sell all the products. Under this method, as we said, we need to consider the final goods and services. Sometimes, to avoid double counting, in this method, you can use the value-added method or the value-added approach. Let us consider, for instance, a commodity like cement. Let's say cement, which is produced by a certain company or industry, and we know maybe the prevailing market of cement is about, let's assume, is 20,000. Okay. Now, this price is the final price of this commodity, which is a cement. Now, but this product is resulted as a combination of different raw materials. We have stones, which is used to produce cement and other materials. So assume now, by using the value added, assume the first person extracted stones. If his or her activity is extracting stones, maybe that stones can value 3,000. Okay. Then person 2 go and buy these stones and manufacture a cement in his or her industry. So a manufacturer buy this stone and produce a cement which will cost 15,000. A manufacturer can sell the cement to the wholesaler. Let's say case 3, the cement will, before reaching the final user, will go to the wholesaler. Now the wholesaler will buy the cement from the manufacturing industry, then bring up to his or her store. Now the cost to buy a cement to the wholesaler will increase from 15 to 18. Okay? So if you go and find the cement to the wholesaler, you will get for 18,000. Also, the wholesaler will sell this cement to the retailer. Number 4, let's say the retailer will buy cement to the wholesaler, and the retailer will sell this cement 20,000. So you can see this process of cement passed from stones, manufacturer, wholesaler, and retailer. Now, if you go and ask each person in the economy what is produced, person 1 will say he produced stones which sold at 3,000. And when you go to manufacturer will say he produced a cement and sold it by 15. And a wholesaler will say he produced the cement and sold it by 18. And the retailer will say he collected the cement and sold it to final user by 20,000. Now, if you add all these figures, you get the total incomes from each person about here will be 18, 36, then 56. So when you take the total income or revenue generated in each person, will be the total will be total revenue be equal to 56,000. Now this will not equal to total income, or this will not as a national income, since you double counted the stones which is produced by the person 1 and person 2, 3 and 4. Now in order to find the national income by using a product method, we say you need to take the final price, which is the final price of the retailer, and when the product is sold here is going direct to the use. Now to avoid the double counting like person 1, 2, 3 and 4 to be included, you need to use the value added. So the value added, so this is not national income, so don't use this one. I said we need to use the value added approach. Now value added, it means you'll take the value which is increasing in each stage of production. Now at stage 1, the value added here, you'll take 3,000, and stage 2, you will see what is increased from stage 1 to stage 2. Here will be 12,000. So this is value added in each stage. Then stage 3, we can see increase from 15 to 18, so the value added here will be 3,000. And to the fourth person, the value added will be 18 up to 20 will be 2,000. You'll add the value added in each stage, so it will be 3,000 plus 12,000 plus 3,000 plus 2,000. So the total here will be 15 plus 5,000 will be 20,000. So if our economy is producing only one commodity, which is cement, the national income will be 2,000. So by using the value added method, you do like this one by adding the value added in each stage. Or you can take just the final price, which is the retailing price, which is 20,000, will be equal to the same as a value added in each stage. So that is case number 1. Case number 2, we said we can calculate the national income by expenditure method. Now under this method, we need to sum up all spendings which is conducted in the economy. Means national income will be obtained by summing up all the expenditures of household, investors, of firms, government, and so forth. So when you are asked to calculate the national income by expenditure method, you take the consumption or expenditure of household, which is C, plus the expenditure of private investment, which is I, plus government spending, G, plus X, which is the goods the foreign spend or buy from our country, and you minus M, which is the imports, that is the goods and services we import from other countries. So the national income by using expenditure method will be like this one. So this C stands for private or household consumptions, and I stands for private investment, and G government spending, X export, and M imports. So Now you take the expenditure on final goods and services. So our formula be this one. The third formula, or the third methods we are using to calculate the national income, is income method. Now under this method, you need to sum up all the incomes which is received by the factors of production. You need to sum up all the incomes which is received by the factors of production. And we know the factors of production, basically we have 4 factors of production, which is our factors of production. Factors of production in our economy are labor, land, capital, and entrepreneurship or organization. So we have 4 factors of production. Now we know the income from land is rent, and the payment we make to labor is wages or salaries, and for the capital is interest, and for the entrepreneur is profit. So to find the national income by income methods, you need to add all these incomes which the land, labor, capital, and return receive in the providing the services. So our formula will be equal to a wage plus rent plus interest plus profit. So if you are asked to use income method to calculate national income, you add all these incomes or factors of production. So this is the 3 methods of calculating the national income. Now let us discuss the concept of personal income. Personal income is equal to the summation or sum of all incomes received by household in the economy. So this stands for what? Sum. So you take the total of all incomes received by household in the economy. So personal income will be equal to the national income. Take national income, you add up net transfer payments, or net transfer payments. And these transfer payments are the money or some assistance from the government. So if you receive the money from either the government or private sectors, so that we call the transfer payment. So when you add it in the national income, you get personal income. Now the net transfer payment, this one is remained after deducting, after you deduct the contributions like social security contributions, issue of undistributed profit, social security contributions, and so forth. So if you subtract those, you remain with what? Personal income. And disposable income, personal disposable income. Personal disposable income, we take the personal income, you subtract or less personal taxes. So when you subtract the personal taxes, you remain with personal disposable income, and this one will be used for consumption and for saving. So the amount which is you are free to consume and to save is the personal disposable income. Okay, now let us go ahead and see the following problem. We are given that in a single year, the following transactions in shillings were made in the country A as a form. Earnings from rent, we are given. Rent equals to 5,000. Dividends equals to 2,000. Then corporate profit equals corporate profit taxes equals to 300. Then transfer payment equals to 350. Mixed income is equal to 6,000. Then we are given interest equals to 170. Undistributed profit undistributed profit was 200. Then net factor income from abroad, 1,000. Then we are given personal taxes equals to 210. Then contribution to social security scheme, which is 500, and wages equals to 12,000. Now our question is compute the following: national income, personal disposable income, and domestic income. Let us start by calculating the national income. National income, since here we are given the income received by factors of production, now the national income will be the sum of all incomes which the factors of production receive in the economy, which is a wage plus rent plus interest plus profit. So now if you are calculating the national income, the whole, also you can add the net factor income from abroad. You can write simply as a NIFA, net income from abroad. So in our informations, the wage is 12,000. So get 12,000 plus the rent, and here we are given the rent is 5,000 plus the interest. The interest is 170. Then you add the profit here the profit, you take this dividends. Dividends is the profits in shares, so you add it. Dividends, which is 2,000. Then you need to add the mixed incomes. The mixed incomes need to be added, which is 6,000. Then you add the net factor income from abroad, which is 1,000. So when you add all this, here will be 17,000, then 19, 25, 26, so will be 26,170. So the national income, this will be at the factor cost. So since it is the income of factors production, so the national income will be 26,107. So Roman 2, here is A, B, we're asked to calculate the personal income. Personal income. The personal income is obtained by taking the national income, you subtract those incomes which is in but not received, like undisputed profit, social security scheme contributions, and corporate profit taxes. So here you will subtract the undistributed profit, then you subtract social security scheme, then you subtract the corporate profit taxes, then you add the transfer payments. So here the national income is 26,170 minus undisputed profit was 200 minus social security schemes was 500 minus corporate profit taxes was 300, then plus transfer payments. The transfer payments was 350. So this one will be 1,000. So you take 26, 170 minus 1,000. Then you plus 350. So when you subtract this one here, remain with 0,715. Then you add up 350. Then it will be 0, 2, 4, 5, then 5, 2. So the personal income will be 25,520. Now let us calculate the personal disposable income. The personal disposable income is obtained by taking the personal income less direct tax or personal taxes. So, you can see the personal disposable income be equal to personal income minus personal taxes. So it will be personal income minus personal taxes. So the personal income is 25,520 minus personal income. The personal income is 210. So when you subtract here, be 0, 1, 3, 5, 2. So the personal disposable income be equal to 25,310. Then the last part here, we are asked to calculate the domestic income. Now for the case of domestic income, we can say gross domestic income will be equal to gross national income less net factor income from abroad. So the gross national income is 26,170. Then you minus the net income from abroad, which you are given is 1,000. So when you subtract, the answer will be 25,170 shillings. So the domestic income, case D, and therefore the domestic income be equal to 25,170 shillings. So this is all about the solution in this problem. So make sure that you find more problems and use the concept we learned to solve various problems, since these problems can appear in your coming exams. So do practice on that. So thank you. Now let us take a break. Okay, welcome back. Now I'm going to solve some problems from you among of my students. Here I received a question from Jacqueline and students of HGE from Mosh. The question is, we are given that GDP at a market price equals to 850 shillings. Then we are given and the net factor income from abroad is -140, and the net indirect taxes, net indirect taxes is equal to 20. Now the question is, calculate the GNP at factor cost. Okay, now let us respond to the question. The solution, we know that since here the information we are given GDP at a market price equals to 850. Then we are given net income from abroad, which is negative 140, and net indirect taxes, which is equal to 20. But we are asked to calculate GNP at a factor cost is equal to how much, according to the question. So since we are asked to calculate the GNP, first we need to calculate the GNP at a market price, since we are given GNP at a factor cost. So GNP at a market price will be equal to GDP at market price. You add up net factor income from abroad. Okay, so to obtain the GNP at a market price, GDP at a market price plus net factor income from abroad. Now we are given the GDP at a market price, which is 850. Then you add the net factor income from abroad, which is negative 140. So when you add here, since it's negative, so less this one, so it will be 0.17. So the GNP at a market price would be 710 shillings. But we asked to calculate the GNP at a factor cost. Now the GNP at a factor cost will be equal to, I hope you take a note in this problem, the GNP at a factor cost equals to GNP at a market price, you less or you subtract net indirect taxes. So to get the gross national product at a factor cost, you take the gross national product, or you get the gross national product at a market price, you less the indirect taxes. So the gross national product at market price we obtained there is 710. Then you minus the net indirect tax, which is 20. So when you subtract it, be 0.96. So the gross national product at a factor cost will be 690 shillings. So I hope you get the solution. So thank you for listening. This is the end of our session. Goodbye.
Kipindi cha Darasa Online kimeletwa kwenu na Chuo Kikuu cha Sauti Mbeya.
Urembo na utanashati, umaridadi na mitindo ya maisha, mavazi na mitoko, mitindo ya nywele na mambo kem. Yote haya ni katika Naksh. Hivi karibuni hapa TBC1. Ukweli na uhakika.
Kocha Begashe na mwenyekiti wa chama cha riadha mkoa wa Manyara Safari Ingi wanaeleza umuhimu wa kuwa na kambi za mafunzo kwa wanafunzi wanaofanya vizuri katika mashindano ya mita shumta na miseta.
Nilikuwa nazungumzia juu ya Kenya, watoto wale kwamba hazina yao ni kubwa. Nimekwenda Nyahururu pale, wilaya ya Nyahururu pale, ni mazingira kama ya kwetu tu. Viwanja ni hivi vya udongo, maji, madampu, madimbu ya maji, wanakimbia pia afute. Lakini kwa sababu shuleni wanahimizwa michezo na unakuta wanakompiti, ukiwaweka na Watanzania hawa ambao sisi tunasema ni number 1 wengine kwenye 1500, 300 meters, 800 meters, yani wale utawapeleka Olympic. Lakini kule wanawaweka ni benki kubwa ambayo haijawahi kutokea.
Na haijawahi
ya bado kabisa, wala hawajadaliwa kufikia.
Wakati Tanzania
20 years wala Tanzania yote tunatafuta hatuna hata. Kwa hiyo tunaona sasa kufutwa kwa michezo hapa katikati kwa kipindi cha Mheshimiwa Mungai kuleta athari kidogo. Na sasa malipo yake ndio tunayaona, lazima tulipe gharama.